Evening traders. So yeah, this week's a little unusual in that I'm streaming on Friday because yesterday we took the day off for the Australia Day, um, which was kind of good in the sense that the market moved my direction and I let the trades run. But first things first, in regards to these trades, I'm actually thinking about closing them all. Dollar yen. I don't like the market stalling here. I don't like the market being up here into the Friday. Look, GDP could be good. We could be sitting ourselves at closer to 116 on Monday morning. The issue is that over the weekend now we're going to have a fair bit of risk in terms of with Trump and just the levels that we've come so far that I'm a little concerned that he's going to turn his attention, like the Saron, he's going to turn his attention to China, and that could turn some risk off soon. And I just want to get through the weekend. Also, I just want to buy dip on dollar yen. Yeah, I want to buy closer to 114 than we are here. So I'm going to close some dollar yen. Pound. Look, pound has had a bit of a reversal since reaching the highs. Seems like the market did not like its GDP number. It's a pretty decent GDP number. I think probably we're just a little bit overbought into that number, so the market played a little reversey game. Pound yen, look, similar to dollar yen, it potentially could pull back, so that's enough for me to decent profit to take. Euro pound, I'm also going to be looking to sell again. Okay, so sometimes when you get decent profit and you come into the weekend, I don't want to give it back. There is some definite event risk today with Trump and May meeting. Now, on one hand, Trump wants to sort of bond this special relationship with the UK. On the other hand, he hasn't exactly been friendly to trade deals, and or trade deals which aren't beneficial to America. And so a free trade deal is probably not on the cards. It's more like a bilateral trade deal, some sort of special sort of export-import rules, but nothing major. I don't think we're going to get anything close to a free trade deal out of Trump anytime soon. And so I think there's more room for disappointment, especially if they come out with just platitudes and no real concrete sort of details. If it's just more in theory, once you guys are in Brexit, we're going to be there, we're going to look after you, blah blah blah. I think you're doing a great thing. I'm just sure Trump's going to say stuff like, Brexit's the best thing for you. Get out of that European, malaise, whatever. And then the Europeans going to be like, hello, we're your allies. What are you doing? What are you saying? Right? I can just imagine the Germans going, what is going on? Does this guy know the war is over 70 years ago? It's going to be a weird weekend. He's also speaking with Putin. So there's a little bit of risk here. The pound has come a long way, stalled a little bit. I'm just going to take some risk off here and just see how it goes. I do want to be buying pound yen, and I do want to be buying dollar yen just lower. I want to be selling euro pound higher, towards 86. That's the sort of levels I'll be looking. Dollar yen towards 114, pound yen towards at least 143. Yeah, 143.50 maybe. We'll see how the dollar yen plays out. Basically, when I go to buy dollar yen next, I'll have a look at the pound yen, see how it's rolling. Go have a look at the pound itself, see how it's rolling. I mean, look, it could just keep going up. The pound does that sort of stuff, right? It's just pretty relentless when it starts to move higher. And perhaps there will be enough positivity out of this meeting with Trump that the market just doesn't stop. Right, but it's enough of a risk, I think, to sort of sit to the sidelines, wait till Monday, then reinitiate with a little bit more conviction, yeah, or maybe even tonight if we get a pullback far enough somehow. Now stocks don't look like they're pulling back. Stocks seem pretty strong, above this 20,000 level, and the DAX seems pretty strong as well. So you can't really rely on risk off from there to drag down dollar yen just at the moment. You never know. It is Friday. Profit taking might happen. It's close to the month end, maybe some profit taking happens, but I doubt we're going to see big moves today, unless the US GDP is really stellar or really negative, and I doubt that's going to happen too much. So look, the US GDP is pretty important, one way or the other for the dollar. If it's strong, then the Fed's going to be talking up, the market will start to talk up the Fed raising in March. Now that's not really on the cards at the moment. So a decent GDP and a strong NFP, or decent NFP next month, and perhaps we are talking throughout February about March, the Fed raising rates, and that will be a catalyst for a strong US dollar, no matter what Trump says, right? I mean, that's a big story. That's a theme that could be worth 300 or 400 points on the majors. Yeah, and month-end flows, usually mix things up a bit as well. FX Ram's right. Some Euro pound buying is possible. So we hit our targets, and it's just waiting, right? Waiting for a new opportunity. Now, there is a trade I like. I am not going to push it on you too aggressively, but we will look at the reasons behind it a little bit later in the stream as well. Morgan Stanley came out with a little bit of report on this. I've been waiting for some Aussie dollar weakness, just in general, since the big rally from 71. Okay, this is just the start, first day of trading in January. We had this start of this huge rally. All right, for the Aussie, this is a huge rally, up 400 points. Now the market is stalled, and in the last couple of days, we're starting to see lower highs. Okay, this is for the first time in a little while we've seen lower highs. 200-day moving average and the major resistance at 75 is now really close. What happens here is pretty critical, and I suspect that the risks are now to the downside here. The US dollar's gaining strength, and the Aussie dollar's momentum's waning, and it's has not too much has changed apart from sort of this technical pullback, and a break here I think will lead to more selling, and that weak CPI has just sort of cast this cloud over what the RBA is going to be saying next week, so the week after next, and I suspect it's easier to sell than buy right now, especially if stops must be close. They must be close here, the trailing stops, and a test and a break below seems pretty inevitable and pretty common sense here. So I'm selling Aussie actually. I might sell a little bit in the streaming account. Let's I mean, basically the trade is pretty simple. It is selling with just a 30-40 point stop. You get stopped out if Trump says nothing about China soon, and you get stopped out if this level holds. But and if the US GDP is weak, but otherwise I think this is a pretty high probability with all of those things being just neutral. Without anything happening, I think the market's going lower here. So I don't mind selling some Aussie, and the target is probably around about 74.40. So about 2-to-1 risk reward. It's not too big a deal, and I just like the trade, and we'll go into a bit more why later. Euro Aussie is also helping a little, yeah, and this is like when you're going to sell the Aussie, you got to be very sure certain things are happening. One of the things that I really look at is this Euro Aussie. It sort of tells you the bellwether of how the Aussie's going. And when it's market's starting to move up against the Aussie on the Euro Aussie, it's not doing great. And this one's a fast mover when it breaks high. And it's a fair bit of move. This sort of move will be towards 144. That would get the Aussie back down to 74.40. So it is an important part of it. There are multiple ways that can happen as well. So that's another little clue to look into the market. Yeah, sometimes. I suppose when you go looking for reasons to sell something, you can find them, right? I just think this is still got some stops to run here, but we'll see how it plays out early next week. You could have easily been selling from 74.40. The same trade was in play back then, but yeah, no, we're down here now, 75.20. You don't want to put your stop higher than 75.60, right? I mean, if it gets back up here, 76 seems inevitable. Now the resistance above this level, if somehow it does get above 76, you got pretty strong resistance up at 77.50, and that could be another attempt early next month if the US dollar has correction low, or it keeps on being sold off. Another little place to have a stab at. Really strong resistance up there from last time. It would take the RBA turning or being surprisingly, neutral after that weak CPI number. So yeah, that's another little trade I have in the back of my head. It is contingent on the US dollar a little bit, but not as much as the others. Aussie's been doing its own thing for a while. Though I don't want a huge reversal in the euro, that's for sure. Lucky we got out of these long dollar yens. Yeah, so that's where I'm at here. I'm going to be watching this US GDP later tonight. Probably the last thing I do before I go to bed. If it comes out crazy, I'll probably make a couple of trades there. I want it to be a little bit weaker than currently priced in. I want the market to fall, and I want at some point for it to shrug that off, right? So that's easier to trade than if it comes in super strong. Then the US dollar will be at levels that are very hard to buy for dollar yen. Well, harder for me anyway, and harder for me to sell the euro. Below 106, right? It would be not my sort of game. But that would also help the Aussie, so I'll be making money there if that was the case. If it's super weak number, things get a bit more interesting. Still be interested to buy the dollar yen. 114. Market will look towards NFP pretty quickly, I think. And that's been strong for 6 months or so. Well, coming in higher than 150. Merkel and Trump speaking on Saturday as well, from the latest tweets I'm seeing here. Yeah, there's a fair bit of weekend risk here. I wouldn't be holding too many trades open over the weekend. Maybe selling some euro at 107.20 is also on the cards here. Alright, let's have a look at some of the research. In particular, we're going to be looking at the Morgan Stanley report on the Aussie dollar. So we just talked about selling it for a few reasons there. Looks nice on the charts to be sold. Now we're going to go into some of the more real reasonings. I suspect that the RBA is going to be a little bit more dovish than is currently started to be factored in by the markets. They think that China's upcycle in terms of its impact on commodity prices is nearing its end. And they're actually talking up the China risks. $69, this is a medium-term target. This is pretty dangerous. and they expect to slow down the Australian housing market to push RBA to deliver a cut. So Morgan Stanley want a cut, JP Morgan want 2 cuts this year. Market's pricing in 0, chance of a rate hike late in the year. That's current market pricings. So this is in the bearish camp for sure. Alright, disappointing inflation print this week. Failing to keep up with this global backdrop. Yeah, that's true. We definitely haven't had the same amount of rebound that seems like everyone else is having with their PMIs. So this is just looking at the change in the RBA's perception by the market. This is when they're cutting rates, right? So when you're cutting rates, it seems really far away that they're going to be raising rates. Now the market's gone to neutral, the RBA's gone to neutral, and the market's now sharply pulling lower when they're going to be raising rates next, towards just 15 months now. Now, if they start to cut again, or they open the door to cutting again, that's going to really dramatically change that outlook. So if they open the door to rate cuts again, which is definitely something they can do, you would really see some negativity come through on the Aussie dollar. And the meeting's on the 7th, Tuesday the 7th. So we've still got 7 trading days till then. There's a fair bit of bond talk here, so I'm not going into that. And options talk, which we can go into as well. It's not the worst pair to be using options with. This divergence between the RBNZ and the RBA, if it becomes clearer during the year, like the RBNZ starts to talk about rate hikes, because their economy is going a lot faster than ours. That's the sort of talk that will get the Aussie Kiwi going down to 1 for the first time. It's sort of got a feel of inevitability about it. Really happy I didn't get suckered into that break above 105. We're talking about that, and I was like, oh, not this time, guys, not this time, I'm not buying this. I didn't believe that Aussie rally, really. But also, this is, yeah, this is dangerous. I know Dave West, you're buying, mate. This is the worst scenario that you could have imagined. That weak CPI in Australia, strong CPI in New Zealand is tradable to the downside here. Support breaks. I mean, it's not that far. Once you get close enough to the parity, you think it'd be like a magnet to to get it to test it. Got to what, 116, 1.0017 last time. Probably won't stop there this time. We'll test it, maybe break it. If it goes too far underneath it, really that's the trade of the century, right? That's the trade of the decade for me, or the trade of the year. You know, let's not be ridiculous. The market's giving us so many opportunities now. We don't want to overhype something, but something like a 98 or buying between parity and 98, I think, and you held that for 12 months, you'd be making 10% return pretty comfortably. You might have to hold it for 12 months because it could be wrong on the timing of the turn, but when the turn comes from there, that'll be a big move. So China's trying to stop money going out of China. It's trying to control the yuan rate as well. It's definitely got a little bit of a job ahead of it. If it tightens too much, it could really hurt the local economy. And they're still trying to orchestrate this soft landing, right? See, the bond prices are ticking high here. %50 of global commodity demand is in China. I didn't know that. Recently, the Aussie dollar has been supported by not only commodities, but hope for higher fiscal spending globally, and also from a weaker US dollar following verbal intervention from President Trump. Yeah. View the US dollar cannot be held lower for long amidst improving data, expectation of fiscal spending, and pricing in Fed rate hikes. Pretty much my view there. We'll be watching the Fed meeting statement on the 1st of Feb. Oh, Wednesday night. It's only 3 days away. Yeah, I mean that is actually a huge risk event next week. I was looking to the NFP, right, but we're going to get hints from the Fed earlier than that. They're probably going to have a very much a wait and see approach. That could deflate the US dollar perhaps as well, if they're non-committal. We're definitely going to get into that in the first couple of days next week, right? We're going to talk about strategy for the Fed meeting, what is possible for them to come out with. I can't see them coming out ultra aggressive. Not in their first meeting, right, politically. I'm surprised that hasn't been talked about more in the market. That's caught me by surprise, actually, that was there. I mean, I know that obviously you had to have a meeting before March, but I hadn't really check the timeline. That's only a couple of days away, and it will have an impact. I know it's pre-NFP, so it's not going to have too much data to go on, but definitely, you know, how they react to Trump, and they have to have something about the fiscal spending in there, and also trade. You know, perhaps, you know, the impact on trade impacting the American US dollar, US economy. I think that's something which could be really, you know, market moving early next week. SocGen's looking for 125 still on dollar yen. Yield's going to keep on going up. He believes that Trump's tax policy is going to help corporate cash repatriation, which is something like $1 trillion to $2 trillion worth of US dollar buying. Buying dollar index and buying dollar yen. And they're not committal on the pound. So this is what I was talking about before. One of Trump's campaign promises was a one-off tax holiday allowing American firms to repatriate funds held overseas with a 10% tax rather than 35% tax. 1.4 to 2.6 trillion in retained earnings abroad. The previous tax holiday in 2005 saw 300 billion. Another tax holiday probably generate large inflow because the pool of foreign retained earnings by the US firms is estimated 2 to 3 times larger than in 2004. So yeah, I mean, it's I think there's enough reasons to be a little bit cautious going into the weekend. We'll see. Had a little bounce off 115. We'll see how the markets respond to this US GDP number tonight, and we'll come back early next week with a new game plan. Probably looking to buy some US dollar, but definitely we'll be focused on the Fed, and then we'll be focused on the NFP. That will be our main play. Short Aussie is the only trade I've got going now, and that's for the few reasons that we talked about already. But I think it's about time as well for that one. See how that plays out. I'm not selling dollar yen, but I'm not buying here yet either. So I just closed out a long Vetra FX. Looking to buy again closer to 114. Depending on the negative news that comes out, right? Hopefully it's just a bit of Trump banter, maybe a bit of a stock market pullback. Something gentle will allow me to buy with a little bit more conviction. Depending on what's said, right? I don't want to get in trouble, because even at 114 you can get into trouble here quite easily. And you probably won't get 114, maybe you get 114.40, 114.20. But we'll see how it plays out next week. That's if we do get a pullback. You know, there is other scenarios where strong GDP tonight just lets the market start to continue higher. Alright guys, Kiwi is similar to the Aussie except for it's stronger, right? So they don't have the weak CPI, they don't have they've got the high yield, and they've got Aussie Kiwi support. So the Aussie Kiwi support's pretty real. They've got Kiwi Yen rallying. They've got basically buying the Kiwi against everything. Now it won't be completely immune to Aussie dollar selling off, but it should be able to hold its own a lot better. So yeah, the Kiwi's really hard to sell without a reason. Yeah, this is, you know, if you looked at in the past, Kiwi's an account killer if you try to sell it. And although it's at some nice levels, I would I'd be waiting for it to overshoot a little bit more. And let's see what the RBNZ has to say You know, if the RBNZ goes neutral, that's a pretty strong change in the market. Because at the RBNZ go neutral, that's a pretty strong change in the market. So yeah, there's no rush to sell the Kiwi. I can't see the argument to sell the Kiwi when you could sell the Aussie. Yeah, it's just, you get into trouble. It's like, why would you sell the pound when you can sell the euro? Makes much more sense. There's a lot less risk. Although I do see this, right? It's not like I don't see this. This is... Yeah, perhaps it'll be dragged low, kicking and screaming by a strong US dollar. I just think there's easier games out there. If you wanted to sell the Kiwi, you might want to pick something which has some movement behind it, like a pound Kiwi. Yeah, so a pound Kiwi might be better. You can still get a lot of pips out of it. It's just it's just got that topside potential in the normalization of the pound. Whenever that happens, you know, you can make more pips out of it there. But that's pretty dangerous. That's a timing trade, right? That's very important to be timed in on that properly. Alright guys, have a good weekend. I'll be back on Monday at 9 GMT. If you do want me to look at particular pairs, send me a PM or come into the chat if you're at YouTube and at Forex Signals, and it's free to come in. You can ask questions here. Alright, good luck.